So in this video, I will talk about a stock. The name is Skipper. Okay, you must have heard about the company. Uh, I want to discuss with you that in spite of everything good about the company, why am I rejecting the stock? Why is it not on my watch list for today? So today is 29th of November. As usual, it is 7:30 in the morning. I just had my morning walk, had some tea. I wake up at 5 o'clock in the morning daily. So it's been a nice, wonderful morning. So I wanted to discuss with you before the market opens why this stock is not on my watch list. Now, see, I don't make recommendations, I don't give investment advice or tips or anything like that. I don't have any social media. I don't have any WhatsApp group or Telegram channel or anything. It's just pure education. Okay. Just watch my videos and learn and apply. It will help you. Okay. As simple as that. Let us look at Skipper. So first let me log into our best platform India has, which is MarketSmith. And by the way, I am not associated with MarketSmith in any way. I don't promote them. I am just saying that I use it because it saves me a lot of time. Okay. So Skipper. Let's see this stock. I love this setup. I love this technical setup. Okay. So have a look at this stock. Okay. Very, very powerful. As you know, we do three kinds of analysis. We do means I do three kinds of analysis on a stock: comparative analysis, technical analysis, fundamental analysis. In comparative analysis, I look at four things: the relative strength of the stock, the industry group rank, the improvement or decline in the industry group rank, and the institutional demand rating. Out of four, I want at least three in my favor for me to confirm that the stock looks strong comparatively. If all the four are in my favor, then it is not strong, it is very strong. So let's look at this stock. So it's an electrical power equipment company, prominent Indian manufacturer of power transmission and distribution structures. So it's basically hardware, something to do with the power industry. I don't want to go into that details. My interest is here. Price strength is 89. Anything above 80 is fantastic. Accumulation distribution rating. This is institutional demand rating. It is A plus. Fantastic. The problem is here. Group rank is 93. I want this number to be 40 or less than 40. Let's look at improvement in group ranking. Okay, so electrical power equipment. So this is the link that I use. So electrical power equipment. So 93 is the current group rank. 6 months ago, it was 20, which means what? The group rank has increased, which means what? The industry strength has worsened. The industry strength has not improved. Okay. So it has gone from 20 to 93. Not good. And 93 itself is not good. Okay. So out of four factors here, out of four factors, only two are in my favor. So I cannot say that the stock is comparatively strong. Now let us look at the technicals. If you see the technicals, the price is above the 50-day moving average. The 50-day simple moving average is above the 150-day simple moving average. And the 150-day simple moving average is above the 200-day simple moving average. That is a strong stage 2 uptrending stock. Okay. Number two, is it forming a base? Of course, it is forming a base. Look at this price tightness. There is price contraction, there is volume contraction. This is like a perfect VCP setup described by Mark Minervini in his book Trade Like a Stock Market Wizard. Okay. So this is very powerful. If I go to trading view, let me show you that setup. I have drawn the base. In MarketSmith, chart doesn't look as clean. So let's go to Skipper. Have a look at this. See, I have drawn this base. Point 0.1. Yeah, this is point 0.1, point 0.2, point 0.3, point 0.4, point 0.5, and point 0.6. So as you can see, the price is contracting, the volume is contracting. It's a nice base, fantastic setup. I have drawn the yellow line at the point number 5, which is the buy point. Okay. And another yellow line, which is 1% above that first yellow line. So that the gap between these two yellow lines, that's the buying range. As long as the price is inside that, I am okay to buy. Okay. So, and there are 6 points in the base. There are more than 10 candles in the base. There is blue, green, red. Everything that we are looking for is available here. And the yellow line is in the blue zone. Okay. So technically, this is extremely strong. Comparatively, it is not strong, but technically, this is a very strong setup. Only one problem. Okay. If you see this green dotted line, when you click here, see it says pattern is consolidation. You look at the upper rectangle box that opens up the pop-up. Okay. So it says pattern consolidation stage 6B. Stage 6B means this is the sixth base, and within the sixth base, B means the second buy point. Okay, A means the first buy point. So the stock broke out of the second buy point. So remember base counting video that I had made. We want to know whether we are the stock that we are buying, is it in early stage, middle stage, or late stage. This is clearly late stage. Anything above stage 5 is late stage, because by the time a stock goes from stage 1 to 1 or 2 to stage 5 to stage 4 or 5, the stock would have already given 100% or a 200% return. So the stock has already gone up. If you look at the weekly, okay, see the stock has already gone from 49 rupees to 500. That's a 10 times increase in how much time? It was July 2022. So roughly uh, within 2.5 years, the stock has gone up 10 times. So you're buying the stock late. You have to realize this. This is the EPS line. Okay. EPS is growing. We will talk about fundamentals later. But what I'm telling you is in 2.5 years, the stock has already gone up 10 times. So before you buy the stock here, you need to be aware of this fact that you are buying late. This is not the time to be buying the stock. You should have bought it 1 year ago or 2 years ago or 2.5 years ago. Okay. So you should be aware that you are buying late. I am not saying don't buy the stock. I am just saying that you are buying late. So you have to be careful. You have to manage your risk. You have to micromanage the trade. You have to go in with a small position size if you decide to buy the stock. I personally have rejected the stock because of certain reasons. So when I do the comparative analysis, I find two weaknesses: poor industry group rank and declining industry relative strength. When I do technical analysis, I find one weakness, which is the stock is in a late stage base. Late means very late. It's like beyond base number 5. It has gone out of base number 5. So 6 is too far beyond for me. Okay. In my past, I have made mistakes like buying stocks when they were in base number 8. So if you remember HBL Power Systems, I bought the stock when it was in base number 8 and I lost money on that. I did not lose big money. I never lose big money because my stop loss is very tight. But still I lost money. Okay. So from that I have learned a lesson. No matter how great the setup looks, okay, I am not going to buy the stock in late stage. Now, does that mean the stock cannot break out? No. The stock can obviously break out to today when the market opens, it might shoot up 20%. But the probability of that happening is not very high, okay, because of these weaknesses. And even if it shoots up 20%, okay, you might end up getting into the habit of getting into such situations where there are some weaknesses. So, like this, if you buy 10 stocks which look exactly like this, 5 might go up, 5 might go down. Okay. And overall, net, you will not make any money. That is what I'm trying to convey. Okay. One or two stocks you will be unfortunate and it will just run away from you. But you have to realize that in over a series of trades, assuming you buy 10 stocks with the same characteristics, same technicals, same comparative, same fundamentals, assuming you buy 10 stocks like this, you will not make money. Okay. Overall on a series of trades. On this trade, you might end up making money and you think that you are intelligent or you're brilliant or whatever. But over a series of trades, you will end up giving back your profits because you are not buying a stock that is optimally set up. Okay. So technically, there is one weakness. Comparatively, there are two weaknesses. Now let's come to fundamentals. Okay. Let's look at the fundamentals. So latest 3 years, the earnings EPS has gone up, which is positive growth, which is fantastic. So the earnings latest quarter, the earnings has decelerated. There is growth, but there is deceleration in growth. Even in sales, there is growth, but there is deceleration in growth in recent quarter. We don't want deceleration, we want acceleration. So again, you find a weakness in its fundamentals also. Another weakness, the number of funds that are holding on to the stock, although it has increased, okay, from 16 to 43, that's a big jump. Okay. However, the number itself, the absolute number itself is very small. If you look at Zomato, okay, that same number is more than 1,000. So there is a lot of demand. There is a lot of people involved with this stock. Compare that with Skipper. Not many people are involved with this stock. So the stock doesn't have that recognition. Okay. Another thing I want you to notice is poor return on equity. We want this number to be more than 17%. Poor return on equity. Another thing I want you to notice is the earnings stability. If this number is 20 or less than 25, it means that the earnings are stable. If this is beyond 2025, the stability, the bigger the number, the less stable the earnings. Okay. Again, that's a weakness in that stock. Another thing I want you to notice, another weakness is this stock is not a market leader. So if you go to the industry, this is the industry page. You go to stocks. Okay. Have a look at this market cap wise. If you go down this list, where is Skipper? See, it's here. It is not even in the top 20. Okay, probably it's rank 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So it's the rank of this stock in the industry group. Okay, when we look at market capitalization alone, the rank is below 20. Okay, is not even in the top 20. So this is not a market leader. Okay, if you read William O'Neill's book, he says that you stick to only those stocks which are in the top three. Generally, in any industry group, the top three players dominate. So in this industry group, the top three players are ABB, CG Power, and Havells. This is where the most of the money is. Okay. That is what is recommended by William O'Neill in his book, How to Make Money in Stocks. So this is another weakness. Another weakness which is not related to the stock is the market conditions itself. Okay. Now, if you see, there are 6 points in the base. So there are 6 points in the base, very tight price contraction you see in the stock, which is fantastic. However, the market is currently trying to attempt a rally. So it is not in a confirmed uptrend. It is not even in a state where the uptrend is under pressure. In this state, we are allowed to buy fundamentally strong stocks which may not be technically strong. In this state, we are allowed to buy fundamentally strong stocks which are technically strong as well. So these are the only two states when we are allowed to buy the stock. But we are not in those two stages right now, which means the market conditions are not ideal to buy any stock. Okay. This is another reason why I have rejected this stock in spite of the fact that it looks like a perfect VCP pattern. Okay. I am saying no to the stock because I know that if I continue doing this, Over a long trading career of, let's say, the next 25, 30 years, I'm not going to make money because I'm violating my own rules. Okay. Today morning, when the market opens, this stock might shoot up and close 20% above its current closing price. But I know that in the long run, if I continue to make these kind of purchases, that is not going to help me make money. So this is called as probabilistic thinking. You might say that, Rohit, the stock shot of 20%, we lost the opportunity, this and that. But no, if you buy these stocks, you will get into the habit of buying similar stocks with non optimal characteristics. And eventually, you will end up giving your money back, what the money that you make here. So, I want you to start thinking in terms of a series of trades, not in terms of one particular stock. Just because the setup looks good doesn't mean that you have to buy the stock. Okay. Now, you do whatever you want. I am just telling you what the analysis that I have done. Okay, everything about this company looks great, but I see one or two weaknesses here and there, and in these kind of market conditions, I'm not comfortable. Yes, if the market condition was in a confirmed uptrend or uptrend under pressure, I would have probably bought the stock, that too with a small position size, half position size, maybe 3% or 5%. Okay, even after buying half position, I would have micromanaged the trade because it is not optimal, even if the market was in a confirmed uptrend. So you see how conservative my approach is towards the stock market. There are many other stocks which are far better than this stock, comparatively, technically, fundamentally. So why not focus my research on those stocks rather than, you know, trying to figure out how do I get into this stock or whether I will miss the opportunity or not. So what if the stock goes up 20% today? I am not bothered with that. I cannot make or lose money in a stock which I never bought. Okay. Most importantly, I cannot lose money in a stock which I have never bought. Okay. So no regrets. I'm just rejecting the stock based on my analysis right now. I am just taking decision based on my analysis right now. That is very important. Okay. So that's my analysis. I have looked at the market conditions. I have looked at comparatives, technicals, fundamentals. I like the setup, but I say no to the stock. Okay. Thank you so much for your time. Thank you so much for your support on this channel. Hope this video helped you.